Elon Musk predicts horrifying financial crisis. Elon Musk, CEO of Tesla and SpaceX, predicted a horrifying financial crisis. It's common knowledge that this year has been a turbulent one, and the financial market has not known a moment's rest. The tech mogul forecasted the commencement of a global recession for the year of 2022, which is not a very positive projection. According to Musk, the globe will experience an economic or financial crisis this year. With inflation on the rise, experts also predict more tumultuous financial times to come. On what basis did Musk predict a crisis? Keep watching to find out. In March, the U.S. economy added nearly 500,000 jobs. The Dow Jones Industrial Average is only 6% away from its all-time high. American households collected around $2.5 trillion in excess savings during the pandemic. Despite all of the good news, Wall Street is abuzz with forecasts of a coming recession. Billionaire investors, formal Federal Reserve officials, and now even investment banks have all predicted that the economy will crash in 2023. It's an issue of historical comparison for some. In a recent Washington Post op-ed, former Treasury Secretary Lawrence Summers noted that present economic conditions are indisputably similar to prior pre-recession times in U.S. history. Elon Musk also has a pessimistic outlook for the economy in 2022. In a tweet, the tech mogul predicted the start of a global recession. According to Musk, the globe will face an economic or financial crisis this year. However, he did not provide any additional information or a rationale for his decision. So, we'll have to speculate. Only a few months ago, financial markets were in the midst of one of the wildest anything-goes moments in history. Today, though, the mood is different. Experts believe a stock market catastrophe is likely due to rising prices and interest rates. According to Musk, predicting macroeconomics is hard, to say the least. My guess is that it will happen in the spring or summer of 22, but not later than 2023. Musk made these predictions just as several circumstances began to deteriorate. The Ukraine crisis, Russian sanctions, China's zero-COVID policy, skyrocketing inflation, and U.S. Federal Reserve interest rates hikes are all projected to restrict GDP in 2022. The question is whether the global economy will contract due to deteriorating conditions and ill-advised policy initiatives. There's no denying that the stock market has had a difficult start to the year, and many on Wall Street believe it will only get worse. This is not surprising given the escalating tensions caused by upcoming and ongoing geopolitical events. According to Nicholas Kolos, co-founder of DataTrek Research, unexpected geopolitical developments are always a risk for investors. Although it is difficult to predict geopolitical developments, there are several grounds for investors to be concerned about in early 2022. Following Russia's invasion of Ukraine, U.S. President Joe Biden imposed sanctions on the country. North Korea is also reportedly considering resuming nuclear and long-range missile tests. Finally, rising tensions between China and Taiwan may endanger global supply chains. Despite a robust comeback in the closing days of January, the MSCI World Index of Global Stocks has fallen by over 6% in recent months, marking the worst start to a year since 2008. This translates to $6 trillion worth of loss. With investors expecting the Federal Reserve to raise interest rates swiftly this year, the stock market is ready to react brutally if earnings growth falls short of market expectations, particularly after Facebook's abysmal results surprised investors. The post-financial crisis high-flying technology equities in the United States have dropped by around 10% in 2022. Larry Summers, an economist, former Treasury Secretary, and Harvard president, also predicts a severe recession, but doesn't say when it will happen. According to a Bloomberg Markets Live poll, investors and economists are on the same page, with 15% forecasting a recession in 2022, 48% in 2023, 21% in 2024, and 16% in 2025 or later. An economic recession is a time of widespread economic slump, typified by a drop in the stock market, a rise in unemployment, and a collapse in the housing market. A recession differs from depression in that it is usually milder. A recession is frequently blamed on government leadership, such as the president, the head of the Federal Reserve, or the entire administration. Elon Musk gave some investment tips recently to possibly protect oneself from this incoming doom. This advice includes when to buy and sell stocks. Musk claimed that he is frequently questioned about how to improve one's riches. And his most important piece of advice? Don't panic when the market panics, Musk wrote on Twitter. First and foremost, he says to only buy stocks that you believe in. There are a few key components to the first premise. Musk advised investors to buy stock in numerous companies. Although he didn't say how many stocks to buy, it's a good idea to spread your money over multiple stocks. The multi-billionaire also shared his recommendations for stocks to buy. He suggested that you put your money into firms that make products and services that you believe in, emphasizing the word you. On this front, Musk has lived up to his words. Tesla has the majority of its total wealth. He appears to sincerely believe in Tesla's electric automobiles and solar panels, even if his critics disagree. Tesla's stated corporate purpose to speed the world's transition to sustainable energy appears to be completely supported by Musk. He is the richest man on the planet according to Forbes' real-time billionaires list for 2022, with a net worth of $268.2 billion. And he recently paid $44 billion for Twitter's microblogging platform. Musk has also sold over 4.4 million shares in his firm, valued at approximately $4 billion. He must spend $21 billion in his capacity, meaning the money may be used to purchase the microblogging site. His intention to buy Twitter makes sense. Although Musk has previously questioned several of Twitter's policies, his public statements show that he sees the platform's potential. Musk encouraged investors to sell equities only when the company's products and services are getting worse. My understanding is that he believes the best moment to sell equities is when your original rationale for purchasing them changes. To put it another way, sell a company's stock if you no longer believe in its products and services. He says to remain calm while the market falls. Musk's third principle is in line with his second. When the market falls, he advises investors not to panic. That is fantastic advice. Take a look at early 2020. When the stock market crashed, several investors panicked. Those that didn't, on the other hand, made big profits. In a nutshell, Musk advises you to invest in firms that produce products and services that you believe in. Only sell your investments if you believe their products and services are getting worse, not due to mass panic or dipping stock prices. And focus on the long run, as opposed to instant gratification. Elon Musk also tweeted that it is usually preferable to possess physical things like a home or shares in firms you think make decent products, than to retain your money in cash during periods of rising inflation. Recently, inflation has been gradually increasing. Consumer prices in the United States are up by 7.9% year over year, the largest increase in 40 years. The price of gasoline has risen first, followed by hotels, rental cars, and furnishings. The faster cash loses value, the higher the inflation rate. Investments, on the other hand, usually increase in value over time. That's why, during periods of high inflation, both Musk and Buffett advise investing in strong companies with stable stock prices. However, it's crucial to remember that stock selection is a risky business, and even if a firm has performed well in the past, there's no assurance that its stock will rise in the future. Many experts, like Warren Buffett, advise investing in low-cost index funds, which are less volatile but still take advantage of market gains. These funds are automatically diversified because they contain every stock in an index. According to Summers, every time inflation has exceeded 4% and unemployment has fallen below 5% in the last 75 years, the economy has entered a recession within 2 years. Inflation in the United States is now approaching 8%, yet the jobless rate dropped to just 3.6% in March. As a result, Summers now predicts an 80% risk of a recession in the United States by next year. Investors might be worried about how their stakes in companies would fare, but superstar investor Cathie Wood thinks that investors could benefit from the current situation, and she's not alone. A hedge fund manager, Bill Ackman, stated that he had cashed in a $1.25 billion gain from speculating on interest rate rises and investing the money into Netflix after the streaming giant's poor quarterly results last month. Quote, "Many of our investments have appeared when other investors with short-term time span trash terrific organizations at values that look astoundingly tempting when one has a long-term viewpoint," Ackman wrote in a letter to investors. Investors are nervous since we're having high inflation right now, although this technically indicates the market is booming. However, if Federal Reserve causes an inefficient market correction, the result could be a market crash, and inevitably, a financial crisis. How this will be handled remains to be seen. Do you agree with Elon Musk? Is a recession coming? Comment below.